program where we are going to shift from kind of building your idea to amplifying it and funding it. Today, we're diving into two game changers. So, how to tell your story so that people actually notice, and how to find the resources to keep that story moving forward. So, today we're excited to have Dr. John Lombardi from FSU's Three State Community Media Center. And he's going to talk about some of the things that they can offer to the various companies and ways that he can share how you can elevate your marketing and your visibility. And then we're going to hear from Mia, who they are going to talk about funding your venture, um, where you can find some of these resources, what are some of the varying resources. So at this point, I'm going to turn it over to Dr. Lombardi.
Hi,
So
everybody.
welcome, John, and
Thank you,
you go
Stacy.
ahead and take over for the next 25 to 30 minutes.
All right. Well, I appreciate that. I hope you can hear me. I think I have everything set up correctly on my end for Zoom. Um, as Stacy said, I'm John Lombardi. I am a faculty member in our emerging media program. But in this context, I'm also the director of the newly formed Three State Community Media Center. What this is kind of an offshoot of an art grant, an ARC grant that I wrote a couple of years ago, and we're still getting things, kind of moving forward. But there are a lot of communities in and across the country that have community media centers. We are the only one in this region, however. The nearest one to us, I believe, would be either Montgomery County or Carroll County or somewhere in that area. And they all take slightly different paths, but the whole point of our work in the media center here is to be a resource for people like you, for locals, whether they're individuals just wanting to gain some skills just for the fun of it, or if they are small or large businesses, nonprofits, for-profits, governmental agencies, educational institutions, whatever it is. We're here to help people learn some of the best practices for actually telling your story through the creation of media content. That content can come in a variety of forms, as you well know. That can be print, that can be audio, that can be video, or some combination of those three things. They can be large format programs. They can be short. They can be for social media. They can be for other types of distribution, whatever kind of works for you. But the point of the media center is to be that place where you can come and receive training on varying types of content creation that can be as basic as you would like to more advanced things. I would put in the content creation realm not just the technical elements, but the idea of learning and trying to figure out where your audience is, who they are, where they are, and how to best reach those people, both in terms of where to position the content, whether it's social media, whether it's traditional television, whether it's Instagram or Facebook or whatever social media platform it might be. They're all a little bit different and reach a little bit of a different audience. Traditional with more traditional web-based, your web page is potentially a different audience. So then the point is, there's a lot of different places where you're wanting to reach people and you want to reach them differently. Um, and so those trainings can involve those types of things, kind of the process of identifying where your audience is and what might resonate best with them, all the way through the technical side of literally creating the content. And so we do offer training on a variety of different types of um, things that you might need. At this point, there's not a regular schedule for those, but it's more of if you're interested, reach out and we will find a time to give you what you need. As we evolve and grow, my hope is to have kind of regularly scheduled trainings on different topics, and people, of course, can sign up. But for now, I'm more than happy to customize that for folks and finding a mutually agreeable time and format. The other or another thing that we do is we have equipment available for rental, and that equipment ranges from peripherals that might help you with capturing audio or video with a mobile device, your cell phone or something else, to more professional grade audio and video recording equipment. We also have facilities that can be rented. As an example, the Allegheny County Chamber of Commerce is on a weekly basis now renting our podcasting suite. That is a four-station setup where you can, have not just four people physically present, but you can loop in one or two others via mobile devices, so you can have five or six people kind of being recorded all at once. Um, that space is also good for editing. If you want to do editing of that podcast, we have other spaces that can be rented for either audio or video editing. We have a full five camera high definition television studio that can be rented in parts or in totality, depending on project needs. There's not a flat rate for that because that's going to depend a lot on the client's needs and whether they want pretty much all of the gear, or maybe they just want to use lights and the green screen or some combination. Um, and so all of these things are available. Our challenge at this point is probably similar to challenge many of you are experiencing, and that is how to get the word out. So I'm still in the process of doing that. So certainly these types of meetings are an opportunity for that. A week from Wednesday on the 29th, from 2 to 4:30, I am having an open house. Anyone is welcome to attend. I am going to put in the chat um, the email address for the media center. If anyone would like to attend, just drop me an email saying you'd like to attend. If you want to bring other people, tell me that, how many people are going to be there. The open house will introduce you to a lot of the information that I just gave you, but there will also be physical guided tours of the facilities, some equipment demonstrations as well, and of course some snacks, some food to eat. And so the part of the process, if you're interested, just the same email address is fine. Just email me with any questions that you have, any thoughts that you have. Again, I'm trying to customize or at least be willing to customize kind of training and experiences based on the needs of the individuals like all of you. And so those can be done individually, small groups, potentially larger groups, kind of whatever really works. In terms of process, one of the things that we would like is to have anyone who's interested become a member of the media center. And there are two different memberships. One is free, and we call that the affiliate membership. And that is simply, and there's a little bit of an onboarding process that will give you credentials that you could log into the computers and things that you might need in that space. But again, that's free. Memberships are good for a year, so even though it's free, we would ask that you renew it after, the next year if you want to continue that. There is also an associate membership, which individually is $50 a year. Um, what you get from that or with that is discounts on training, discounts on equipment rental, discounts on facilities rentals, and periodically we'll hope to have kind of networking opportunities for folks, particularly for the members. And there's also the ability to join as an organization, either for profit or nonprofit. The price is $150 or $200, but that would be good for four people. all the same discounts would apply either way. Um, Trainings will vary a little bit. If you're interested in renting equipment, there's a brief overview, kind of a training that we would ask you to go through to learn how to use the equipment, but that's free. Then the equipment rental is there based on obviously it depends on what the equipment is. And I'm going to put in fact, Stacy, can I share my screen so that possible? Um,
You should be able to.
okay. Um, I'm going to click on something and hope it doesn't disconnect me. And then I'm going to try to share this. Okay. I'm hoping and assuming that you can see at least the main page or one of the pages. So this is the Three State Community Media Center landing page, and there, of course, a lot of information. But these are basically the opportunities that we have, depending on what you need or want. I can show you a little bit about the equipment that we have that can be rented. So we have, I mentioned the podcasting suite. There's a physical location where people can come and record. But we also have this kit, which is basically a portable podcasting kit. It is a mixer, it's four microphones, four headsets, and you can do, so long as you have a nice quiet space, you should be able to do pretty good work with that. Wireless microphones that are normally going to be with some of the other equipment. We have different types of gimbals well, one in particular, gimbal for mobile devices. A gimbal, if you're not familiar, is just more of a steady cam type of a thing. So you put your phone on this as it is here, and as you move around, it keeps the shots a lot more steady. There is also a wireless microphone that can come with it. Um, we also have it's basically a gimbal, but with the camera already built in that will shoot either vertical or horizontal. I'm still something of a purist and like my video to be horizontal, but vertical video is a thing, particularly for social media, and so it can do that. It can shoot up to 4K. Wireless microphone. We have a ring light and a portable green screen. We have a higher end camcorder that can also shoot 4K video along with headphones, microphones, um, tripods, lighting kits. We have another kit which is really a DSLR. It will shoot photos, but it will also shoot video. And so it has a mixer and a shoulder mount and some filters and headphones and microphones are available, carts if you need it. So these are the kinds of equipment that we have currently. You can go in maybe even tomorrow if you wanted to and rent these kinds of things. Again, we would ask that you do a little training or demonstrate some familiarity with the equipment before being eligible to rent. But otherwise, it's there. Um, our facilities, where are my, oh, yeah, are here. So this is the podcasting studio. Four microphones, but you can wirelessly or wired connect mobile devices. You could even record basically like we're recording now through via Zoom or Teams or something like that. We have an editing suite, which can be used for audio or video editing or photo editing if you'd like. And then our television studio itself, which is pretty substantial in terms of what's available. Um, so again, the point of us is to try to be that place where you all can come and learn how to better market yourself with media content to get your messages out. We're happy to help in whatever way it would be useful to you. So please let me know what questions you have.
This is pretty remarkable, John. Thanks for the overview. I appreciate it. Um, l- let's say that I'm a nonprofit or a small business within your footprint, and we become a member and we get some training and maybe even some expertise in one or two of these um, pieces of equipment or media. And then down the road, by some miracle, I've got a little bit of funding to purchase our own equipment. Would you provide some consulting on, hey, Bry, this would be a good buy or not a great buy, or could you help us put together a little menu that we might use for purchasing our own stuff along the
Yeah,
way?
I'd be happy to do that. Absolutely. And there certainly are a lot of considerations, cost obviously being one of them, but really kind of what your ultimate outcome is, um, and how often you would use it, where you would use it. So yeah, absolutely be
Hmm.
happy to do that.
And one other question I had was, and the array of equipment you have available is really excellent, but what are the chances of renting a drone from you guys for a day or two?
Good question. I don't have in the media center. We don't have a drone, but we do have on campus. We have some folks who do, and I don't know if they are in a position to rent them out by themselves, but they do contractual work where they
Hmm.
will do the work for you with the
That's
drone.
frankly, that's even better because I don't want to dump someone else's drone in the river, you know?
I did that with my own drone, my first one, yes. So yes, I do understand that.
Okay.
The other thing too is that you really should be licensed.
Sure,
Um,
sure, sure.
and they are. So yeah, or at
Cool.
least they
Yeah,
say
all
they are.
right.
I haven't checked, but
Okay. I may loop back with you on some referrals for that too.
yeah, please do. I'd be happy to put you in touch with the folks on campus who do that.
Does anybody else have any other questions for John? I don't see any. So you will notice in the chat, I did put his open house information, April 29th, 2 to 4:30 in the Gira CCIT 325. That is here on campus. I missed a C in my snap in my chat there. But if anybody has any questions, thank you, John, for coming out and talking to us. And if any of you are on the call today, you want more information, obviously you can reach out to me. Or I did put his email there and he put his email in the chat. So what
Yes.
I was hoping was this is gonna hopefully be yet another resource or another tool in your kits that can help support local businesses in the area, low cost, and to help you kind of get your information out there. And
I
see, we
just
had
put the
something in the
link.
chat.
Yeah, just put the link in the chat for the media center, and Jason Litton is the person that I was going to refer Brian to, that Jody just put in there. So yeah, he's absolutely willing and available, obviously depending on the schedule to do that. And they have a wide range of drones from smaller ones to real big. I mean, not like missile launching size drones, but and some really high tech equipment that they do all kinds of really cool things with. But for video, they certainly do that.
One thing, Brian, just because I'm familiar with the work with the Gap Conservancy, um, at the tech center there, Jason's outfit, they have quite a few sensors too, thermal sensors, even LiDAR. So even with the kind of landslide issues facing the gap, there could be some periodic LiDAR collection that could actually measure the sort of movement of the Earth in those areas. So.
Hmm.
I, you know, happy to, as John said, make an introduction with Jason because Gap Conservancy could have some other beyond media, some other interest in, measuring what's going on the trail that would complement the trail maintenance inventory that was done recently.
Cool. Yeah, what a great thought. Thanks. Yeah, thank you, Jeff, so much.
Yeah.
So any questions now or in the future, feel free to reach out. If you can and are interested in making it on the 29th, by all means do so. If you cannot, but are still interested in seeing the space, again, reach out and I can find another time um, to to invite you over and talk more. And any ideas that you have, if I'm not able to assist, I am more than likely going to be able to find someone who can. So please keep me in mind.
Okay. Well, thank you again, John. And at this point, I'm going to turn it over to Mike, Emily, and Ben, one or all three, I'm not sure, to discuss. So, Brian, now you know where you can come to get all of this. Now let's find out where we can get the money to be able to get the equipment to do what you want to do. So that's what Mia is going to talk about is some funding sources, and I will let Mike, Emily, and or Ben take over from here.
Sorry, can you hear me?
Yep.
Awesome. So let me just. So this is this is kind of I guess maybe even a, I don't want to say the word cleanup, but just a gap filler for some of forays presentations to talk about sort of as Stacy was saying, where the money is, how to raise different types of money, especially state, federal, and private sources. It's a lot of this is based on our own experiences and helping some of our companies raise money. Of course, if there's any questions, let us know, at any point regarding this. I think Ben is down at DC Climate Week, so I'm sure he's stuck in a private room someplace. So maybe he can pop in when he can.
Correct.
Just agenda. We'll look at sort of the big picture funding landscape. Where at least our perspective of where funding is in Maryland. We'll talk about private capital, and if there's time, I did want to fill in some gaps on go-to-market strategy that are I think important. And again, if there's time, I have a cool, inspiring video at the end. Questions as when possible. So as I think we all know, the last couple of years, there's been a dramatic change. But from the funding perspective, there's really for startups, it's been very dramatic because there's less funding. If you're in the technology research side, there's less federal funding now. And there's less private capital, especially for early stage investors. I will say, when I say less, we were at historical highs just in 22, 23. And so we're not quite there. So what that means is, with less sort of funding to get things done, you have to be more commercial quicker. You have to think about revenue faster. And for our startups, it's kind of one of the conversations that we try to have with them. Don't depend on other outside money. How can you get your first dollars in faster? How can you be more commercial, not be so reliant on grant money and other things? So, for a startup program like us, it's kind of sometimes these things can be a positive, and that we're trying to tell people, now that there's less money, it just means you have to think a lot more commercial, from that perspective. It doesn't mean there's no money. It just means there's less, from highs of a couple of years ago. In some of our like overall lessons is, there is no such thing as free money. These are some of Mia's lessons. Meaning, even if you get grant money, you have responsibility and accountability to that grant money. It's almost like signing a contract with the grantees. They'll have sort of check-ins. They'll probably have reporting. You might have to, hit some milestones for them. So there's no free money, and it's really important as you look for different money sources out there that you align it with your vision and the stage of your growth. We always like to say, bootstrap and do as much as you can with the little amount of money you can. Always think about how you can get to revenue and cash quicker. We also suggest to our startups, developing a financial model early of what your company looks like will help you in decision making. So a lot of people don't want to quite do this. Like, what will before you have a company, what will your company look like from a balance sheet, from a cash flow statement, how big it will be in a couple of years? How are you making money? How much money are you willing to, what is it going to take to do marketing? All these things, it's good. You're not going to be correct in the first couple of versions of this, but the more you can like bring your vision into a financial model, the easier it is for you to make decisions on how you're going to move the company forward. Um, we've also found out different funders are very different, even different grant funders, if whether it's a federal funding or state funding or foundation funding, they're all different. There's no hard rules, and that if you are going to look for outside money, it just takes time. There's no quick way of doing this. So if you're going to look for outside money, you need to make sure that you have time to do that. So, overall, the type of startup you are will probably determine the type of capital you need. The stage of growth will determine the type of capital and how that'll fit in within your plan. So, just an open question. How do you think most American companies, fast-growing companies, fund themselves? Any guesses?
Angel investors?
Angel investors,
Venture.
venture. Any other guesses? The main way that companies. All right. Oops. My I was a little faster in my computer. The main way companies invest is actually their personal capital. This is from Inc. magazine. This is like, I don't know if anybody's heard the Inc. 5000. These are the fastest growing companies in America. I will say, I think this data is a little older. So most companies have to rely on their credit cards, their savings accounts, getting a second mortgage. I mean, this is kind of, I know people talk about venture capital, but it's literally just fractions of how people finance their company. Most people finance their company through friends and family, but more than that, their own personal savings. And there's lots of stories out there of companies getting a second mortgage, having, dealing with their spouses on these difficult issues. But the fact is, your personal savings and the credit you can do personally is the number one way, American startups get early funding. There is venture capital, there is an angel investment, but this is a fraction of the types of investment that people get, from that perspective. So if you look at the funding landscape, we again, you could draw this out different ways, but we see that you have your personal finance, and other funders like to see you put in your own personal finance. It's the term skin in the game. I mean, the more money you have in, the more you're going to do to make that a successful venture, because it's just, you have a lot relying on it. Non-dilutive grants are great, but sometimes can make you misalign with your vision as a startup. We have a lot of startups that'll chase SBIR grants, but sometimes those will not be exactly the type of company they want to build. There's dilutive capital or equity, if you call it angels, venture capital, private equity. it's the most expensive capital out there because you're giving up control of your company, and you only have so much of a company that you can give up. Obviously, debt is, people don't talk about debt, I think, enough because typically it's much more than venture capital. And of course, you're paying interest to repay the debt. A lot of companies have actually bootstrapped and used revenue, or have like will have side gigs to basically finance their startup. Again, they gain control of their company, but it takes a lot longer to fund a company that way. And accelerators like us, we have some strategic services that we provide and support. So generally, this is the funding landscape that is out there. I don't know if anybody else has seen other ways to get funding. Obviously, rich uncles would be nice, for all of us, but I don't know how many of us actually have them. Uh, so what we did, for our startups, and Stacy, I think we sent this to you, is we built a list of like some of the most common funders, both a lot in the state and a little bit about what's around there federally and commercially, in there. And if you could send this on to other folks, who are part of the program, because the Maryland is great, but part of the complexity of Maryland is there's a lot of different funding sources, and it takes time to understand how each one works. And so, for our startups, it's a learning process to understand which one is the best for them and who to approach and when. So that's part of the reason we created this presentation. So, there's a couple of organizations that provide grant funding for startups, out there. I've highlighted four that are fairly relevant. There's the Maryland Industrial Partnerships Program, which I think is one of the more amazing programs the state is supporting. They will support 90% of a project up to $100,000. And I know, but it has to be done through a university or research institution, within the University of Maryland system. We've had a lot of startups leverage this. I think there's the people who apply, they get, I think, about 40% roughly. The last time I talked to Ronnie, get funding from this program. So it's not super competitive. And the important thing is that we try to tell our startups, when you work with a university, it unlocks more money. So for a lot of our startups who don't work with the university, MIPS is a way to actually work with the university because then it unlocks more money, like the Maryland Innovation Initiative, which has even more funding to do research for startups. But you have to be part of a university program or research institute. So if you do a MIPS and then do an MII, it's easier from that perspective. Um, a couple other grants that I'll talk about, the Maryland Business Innovation Association, which Stacy and I are part of the board. Once a year, we give out grants to startups. It's not large amounts of money. Probably under $10,000. That should be coming soon, but from that perspective, the University System of Maryland also has a launch fund. I think it's up to $15,000 that you can use money for. So these are some of the sources. Again, in the spreadsheet that I gave, we have like their websites and other things. But these are some of the best grant sources that we've seen. There's things at the county level that we don't know about, but maybe I don't know, Stacy, or if others you want to mention some others from the grant perspective.
I don't have any off the top of my head. Um, Let me see if, yeah, I don't have any right now. I
Yeah.
see Tracy and Jody are on the call. I don't know if either and Herb. I'm not sure if any of those could kind of kick in. They work closer with the local economic development offices. If not, I can definitely get some for you and send those out at a later
Great.
time.
Yeah. So the state has a number of grant funding. It also has a number of venture capital private equity funds. Most of those are managed through TEDCO. As many of you probably know in this phone call, you know, the I think when we're advising our startups to work with TEDCO, we're trying to tell them that it's a fairly large organization. The last time I heard there are 40 or 50 people. They have different sort of silos, and they have different funds, and that those structures tend to shift over time. And so it's important to know that if you apply to one fund, for example, they have a social impact fund, it doesn't mean the other funds know who you are. Because from my experience, folks kind of focus in on their part of the TEDCO program part. So so a lot of people say, well, I applied to TEDCO. Well, you applied to one part of TEDCO. It doesn't mean other parts of TEDCO don't know about you. Yes, you might be in their database. And so, I would suggest, and their website changes and their programming changes a lot. I would just make sure that and they have a very specific process, and I think they like to educate their process. I think they have monthly like webinars that they do. But I would highly suggest to jump on those webinars if you're interested in engaging with TEDCO and you look at the websites and you have to go through the process. People ask us all the time, can you connect us to people at TEDCO? And it really doesn't help. We don't have this personal relationship and to be able to say it. They're a very process focused organization, and so we try to tell our startups to kind of just go through the process. And some of our startups have received TEDCO funding that I'm happy to. There's a couple of funds that are part of the University of Maryland system, including the Maryland Momentum Fund, which also is a private equity or another venture capital fund. And it invests typically as a venture capital. You have to have a unique technology, hopefully some traction. There's also funds like the Chesapeake Bay Sea Capital Fund. If you're trying to take pollutants out of the Chesapeake Bay with your product, that's a possibility. Sorry. And we at Maryland, at MIA have our Climate Tech Climate Fund. We do $50,000 to $100,000 convertible notes with a match, a private capital match. Our sister organization, we have the C3 fund. They do a lot of debt funding for our startups. There's the Maryland State Business Credit Initiative that provides debt, but you have to have a 1x match. So there's again a lot of different funds that the state is supporting out there. From a capital they're more feel like private capital or debt instruments. And again, we all kind of manage our own institutions very separately. And so you have to go through the process for each one. Anything I missed that other people might know about? Just some insights we can say about kind of the Maryland finance organizations. Again, we're a big promoter of MIPS, especially if you're doing anything with R&D attached to it. And we feel like it opens up other funding as if you're not part of the university system to get engaged with the university systems. The TEDCO pre-seed funds for those in Western Maryland, they do want to do more investments in the rural parts of the state. So if you look at that fund specifically, it's there's a bit more opportunity in the western part of the state. Some of the other funds that TEDCO has or the Momentum Fund are more like a traditional venture capital. They want to see some momentum in what you're doing, some customer traction. Um, and I'm going to talk about SBIR next, or in a few little bit. The other thing is to understand when you look at some of these funds, there's an economic development person who put together sort of thinking through what is the process of someone getting funding. So if you think like as a startup, if you start thinking like an economic development professional, you kind of get how to do this. So if you have some research and you're an entrepreneur building something in your garage, you apply for MIPS, which then allows you to look at maybe MII. There's another grant called MEI squared for those in climate or clean energy. And that allows you to get some federal funding, which allows you to potentially get like a TEDCO venture fund. So there's like a process if you kind of think through that way. The other thing is I know TEDCO likes to work with its SBDC offices. They help you kind of think about it, or the EIRs, which get you into a TEDCO program that kind of unlock a TEDCO fund. So part of the process of understanding how to tap into some of the state funding is you have to kind of figure out, and we try to help our startups as much as possible understand that there's a funnel that these people, that the professionals who put these things together think about, and that you kind of have to go through the funnel to kind of unlock, or it makes if you go through the funnel, it eases the process to unlock some of the bigger funding out there. So let me talk a little bit about federal funding, which a lot of our startup, I shouldn't say a lot, but some of our startups go after. I don't know how many people know about SBIR funding in this phone call. But in the regulations, in the U.S. regulations, every federal agency is supposed to give a small percentage of their budget to what's called SBIR, which is small business development around innovation. It doesn't happen like the regulation requires, and in fact, there was a holdup for the SBIR funding for a while, which was just passed, like I think last week. So so we now have a backup on sort of SBIR funding. And so there's a backup of applications out there. But again, every agency, they have an SBIR page. And it's basically they're looking to provide grant funding to solve agency issues that are important to them. And they're looking to get sort of innovative takes on that, around that. And as you can see, I don't know if you could see the graph here, most of the SBI, half the SBIR funding goes into DoD, and then the rest kind of, oops, you can see health, which the state of Maryland has been very successful at, and then we see DOE, NSF, NASA, and others, and then within this administration, money to energy, health, NSF have gone down, but the money to DoD has gone up. So, part of that, what that means is if you're a startup, you might not think you're, building a technology or a business for DoD, but in many cases, you have to think of DoD as a massive organization, and what any corporation needs, the DoD needs. So, for example, we have startups building, new types of batteries. Well, the DoD has 4 bases. They have, people with the soldiers on the ground carry a lot of electronics, so they need batteries. So there's always probably a marketplace, and they seem to be one of the most flexible client around, especially around innovation that we've seen of some of our startups. You can go to each agency's SBIR, and they have a list of opportunities. But I just warn you, there are organizations, and especially a lot of the universities like University of Maryland, John Hopkins, that really know how to tap into this funding. So there is a bit of a learning curve, even though we've talked to people at DOE who want to try to make it easier for first time applicants to get SBIRs. And so hopefully the next next round, it won't be so much complicated. NSF, if you look at NSF SBIRs, it's the only agency where you can pitch your own idea to that SBIR process, the National Science Foundation. And they really like ICOR program, which is a customer discovery process. So the University of Maryland runs that for this region. So if you want to tap into that, I would suggest that you sign up for the Mid Atlantic ICOR program. It's virtual. Um, Again, I wish this was easy to win, but there is a game to it. And if you want to look deeper into this, one of our biggest suggestions is TEDCO actually has an SBIR proposal lab that you can learn about how to apply for some of these proposals. The folks in the lab are great. They're ex procurement managers from the federal agencies. So they know kind of how the game works and what you need to do and how to get the check boxes and the partnerships you need to do. Often, though, it's smart, especially for those doing this for the first time, is to partner with organizations that have actually submitted these and have won SBIR in the past. And again, the universities have done a good job on this. So there's a lot more, again, SBI or TEDCO has a class on this, and I'm talking about it for about 2-3 minutes. Um, but it's a great resource, especially if you're working on something very research heavy and need to basically drive a scientific or technical theory into a product. That's where the SBIR funding really comes into, and to a potential federal client in the long term. Any questions about SBIRs? All right. This just to kind of understand, and again, this goes to more things that are hard tech that need some research on it. Grants are generally used for research, some product development, and then there's another series of investments, the pre-seed, which is generally where the angels come in, the seed is where venture capital, and series A, B, private equity, and then you generally get into some debt funding in between. So each stage of your startup generally matches the type of funding you get. This slide was developed by one of our startups, so I thought it was a good slide to show. It just shows you how much time it takes to go after some of these different funding sources. So, I just talked about SBIR. You're looking at a half a year at the least to get that type of money. A lot of the Maryland programs are probably more like 3 months. So none of these things are quick. And it's just important to understand that if you need money tomorrow, what I've just talked about is not going to give you money tomorrow at all. So I'm going to talk about private capital right now. I know Foray talked a little bit about this, but I'll just go a couple of things that it's important to understand. People complain about venture capital and angel investors a lot, but you have to really understand how they make money. And if you understand how they make money, it's easier to know if you can actually get that type of money. You know, Private investors basically, the only way they make money is they sell your stock at a much higher multiple. And so most investors who are, angel investors or venture capital are looking at what's called a 10x or even to a 2000x if you're Facebook returns. So if they're putting $10,000 into your company, they want to see 6-7 years that they're going to be able to get $100,000 out of that $10,000. And it's very risky. They understand, they'll do 10 investments and they know one or two investments are going to give them that 10x return. And so a lot of investors actually lose money in making these types of investments. So it's a very, very high risk stakes. So venture capital is not as bad as people kind of perceive them to be, because most of them are losing money to look for, an amazing company out there. most investors have what's called a thesis, and they generally try to stick with their thesis. So for example, a thesis might be, when cell phones became smart and became more ubiquitous, a thesis might be we're going to take advantage of the growth of the network effect of cell phones, for example. And that's an investor thesis. And investors are also they look smart, but they really do follow each other. People talk about FOMO. It's very true. I mean, even if you look at the data right now in the venture capital world, the early stage venture capital world, about 70% are all in AI because they're just chasing the FOMO, the hype about AI, because one investor sells to another investor, and so they need to be in the hype world in many cases. When you look for money, we have to tell our startups this is not about pitching. This is a business development process. This is about getting your material together, building up your networks, reaching out, following up. Like it's a relationship building process, just like you would do in a business development process. And also, it's important to understand when we talk to our investors, when you start looking for investment, it's kind of like selling your house. But if your house is on the market for a half a year, people will have questions, right? And so when you start saying you are raising money and you haven't raised money and it's been a year, people will have questions. And so it's important to have a plan and to be able to really put a lot of effort into your fundraising so you can execute, because your goal is to actually, create a market of investors for your company. Just quickly, we mentioned some of the types of investors previously. Um, you know, the big what people don't understand about angel investors is, they're writing checks from their personal bank accounts. So it's their money. Often they will create a group to like bring in more money capital to the party, but generally, their investor committee is generally their spouses, in many ways. Venture capital are investing with other people's monies. So they went out and raised money, and they again went to their thesis and said, we have this thesis, and we believe with this thesis we can find the right types of companies. And so if we have to tell our startups all the time, if you're a great company but you don't match their thesis, the venture capital will not invest in you. Angel investors generally invest in their interests. So you have to understand what industries they worked in previously. Some like to invest geographies, some like to invest in industries. So you have to kind of understand who these investors are. There are social investors who like a double impact where they're helping the environment and also making money. And so for those types of investors, not only do you have to show the financial projections, but you have to show your social impact of what you're saying, what you're going to do. Uh, there are corporate investors out there, like Google has a big investor arm. Intel, a lot of the tech companies, a lot of the financial companies, they're looking for more strategic investments that might fit into their company, that might be a way for them to grow their products portfolio or their marketplace. So they're more strategic, from that perspective. Any questions with that? Um, this is just, I don't want to go too deep into this because um, a lot of startups will ask about how do I evaluate my company? And it's a really, really super complicated question. And the fact of the matter is, like every market out there, there's a market for startups in different industries at different times. So markets and valuations could go up and down, based on demand and supply. And so it's important to look, there's databases, out there and reports. I ran this one from Carta that shows kind of where you're at. So, for example, for a hard tech company, so a company developing a hardware, if you're raising, I'll just use the second one, $500,000, the average, average amount of your check you're going to get is about $300,000. The average valuation is about 12.5 million, and the max will be about 20 million, and the minimum's 8 million. So what does that mean? That means if you're raising $500,000 and you think you're going to get a $30 million valuation, you're outside of the norm range. And unless you're super special, nobody's going to give you that money. So the thing about these types of charts, and again, I got this from Carta, and you do it on, I think, a quarterly basis. It helps you kind of just understand where the market is. So you go out there and you kind of know where your room for negotiation is, for valuations. Uh, just lastly on capital, again, this is like business development. So we call it the data room, like getting all your documents ready, your legal documents, financial documents, any information about customer traction, if you have letters of interest, contracts, anything like that. You need to get your outreach material ready, your email paragraphs, exec summary, pitch decks, other documents. Again, we tell companies to build up their investor list first. The Department of Commerce actually has a database that allows you to uh, create list of investors, and so we will send our startups to them, and they're happy to run investor lists for them. That said, getting a warm introduction, looking in your LinkedIn. If you don't have great networks, going to events, startup events is a great way to learn and connect with investors. That's a lot on the investor side, and raising money. Any questions of what I just talked through? All right.
Hey, Mike, I'm sorry, I have a question for you. This is
Sure, of
Brian
course.
Ferry. Can you say more about um, events and networking and meeting the right folks, especially for those of us in the smaller business space?
Yeah,
Um,
I mean, yeah, it's. I mean, when you say smaller business space, do you mean small business or do you mean
yes, I'm sorry. Yes, like under a $500,000 sort of revenue business, right? Like a mom and pop kind of effort, or a startup that's so new and small. Like I'm not even sure where I would start to have a conversation at a larger event. I'm just trying to get my head around this. This isn't my area of
yeah, yeah.
expertise.
Well, I mean, I think part of the thing is first, because I think there's only so many companies made to get private equity, venture capital, angel investor. The graph I showed before was from the Inc. 5000. So those are companies growing at 300-400% per year. For more small and pop businesses that are just incrementally growing, they're not going to be exciting for private equity or any type of venture capitalist. So, it's really important to understand, the type of investor that you're looking for, because those investors are generally, like I said, they're looking for very risky, high growth
Yeah,
companies.
yeah, gotcha. Okay,
So,
yeah,
so it's one of those unfortunate things that there's before you're ready for bank finance and have enough revenue and history where someone thinks that you can take on bank finance without writing a personal guarantee. And there's just not a lot for small businesses that are successful, profitable, to grow without giving out their personal guarantees and using their personal finance, type things to grow. And I wish there was a better mechanism, but there is, even SBA loans often will require some personal guarantees for some of it. It's just, that said, there are, if you meet people in your business community locally who are excited, and it does happen, who will invest and then take on, they won't have an opportunity to buy or sell your stock, but they might be interested in you providing dividend. It's like the old way things happened 100 years ago. These people would get dividends and type situations. I mean, that still happens if they're
Mm,
excited to be part of your business and things like that. Um, there's also um, you know, crowd, crowdfunding, which I haven't talked about, which can be a source of funding, both from a revenue perspective, where you're basically pre-selling. And there are some crowdfunding sites that do equity, but I think the equity side is much more complicated, and a lot of the companies we've talked to have not survived on the crowd equity part.
mm, mm. I'm tracking. Thanks. That's a helpful response. Appreciate it.
So just real quickly, again, I know Foray talked about marketing and channels and distributions. I just wanted to kind of maybe touch on a couple of things, that that might have been missed, or just to make sure that we kind of uh, put some emphasis on it. So I'm going to talk about everything except for distribution channels, because I think they talked about this. But when you talked about go to marketing, this is kind of the areas you want to focus on. How do you understand a market? How do you start communicating and understand what are the channels? How do you segment the market? And how do you like message the market? So I'll just quickly go over this part. Um, how do you understand and do customer research, market research? I think there's a couple of different levels you want to do, before you get in. We always try to get our customers to talk, or our startups, sorry, to talk to actual customers or potential customers. But before you do that, you should always kind of understand the industry and the market that you're going after. And we have startups now that will actually just they'll create AI personifications of potential customers now, saying, hey, you're a venture bike rider, want to ride in Western Maryland. What products would you want to use? Please use those types of things. And AI is kind of giving that before going out and actually talking to customers. So we always feel like, doing your research on the, web, AI, reading reports, understanding the industries, understanding trends, then talking to experts who might not be customers and doing customer discovery. I mentioned the iCore program before. It's a really great program. Not that it teaches you any, it teaches you trips or tips and tricks of how to talk to potential customers. They're like salespeople who know how to get in and getting interviews with customers. But it also gives you the discipline to go out there and talk to different people in the industry and in customers, because the more you understand about the industry, the more you understand about customer needs. And this is things the web does not know. Like that's where the opportunities are. So the more we found, the more time you take to understand your marketplace, your customer, and your value chain, the better product business model that you're going to discover, around that. So it is not time wasted to do this type of research. We've talked to startups that have taken a year to do this while they're working and stuff like that before launching a company. Um, for market segmentation, I think they touched about it before, but do you know why market segmentation is so important? Can you anybody give me an answer? I think people talk about market segmentation and they teach it, but the thing that's so important about market segmentation, it focuses you. It just it's when I learned about this, 20 or 30 years ago in my MBA class, like business became clear to me personally, because I learned once you know who your customer is, then you know the product you want to sell them, what needs they have, how to market and sell to them, how to communicate with them, how to message to them. Like understanding a market segment, and the more you can define a market segment, the easier it is to serve that market. So I'm one of the people who kind of almost preach this as a religion, like especially for startups who believe the world is their market, and have a lot of different use cases. And there's nothing wrong with having a lot of potential market segments, but when you have no money, you're just starting off, you have to build a product. The more you can focus your product in the beginning will help you create momentum to get your business going. So it's one of the topics that we like to kind of just really hone in on, like what is your market segment? Who's going to be your first client that is going to buy your product? Like, what are they going to look like? And just to prove the point, this is how Uber expanded, from a city perspective, because when you start your company, you should always start your company. When you choose a market segment, you should choose a market segment that has the biggest need and is the easiest to reach. So for those who remember, New York City, for example, for taxis before Uber, you used to have to have medallions, right? And so there were more people who needed taxis at 5 o'clock after work than there were taxis. And so that's one of the reasons Uber went to New York as the second market, because the need was just massive, from that perspective. The other part way you choose your market is what is the easiest market to get to? Like what's going to be the less friction? What has the least amount of regulations, the least amount of money I have to spend from a marketing perspective? Like, so, and that's why they went to San Francisco first, because that was the market where people are willing to say, oh, go ahead and rent your car. And if you're old enough to remember, like that seemed like such an awkward thing that some stranger, you're just going to pop into their car, through their personal vehicle. So, but people in Silicon Valley are used to those two new type of business models. And so when you're finding that first market segment, I think it's super important to really just hone in and focus as specific as possible, because your goal is not to be this massive company in the beginning. It's just to get your initial sales, initial revenue, initial momentum, which will help you grow your company and make you much more legitimate, as you have a bigger vision to, go into, self-driving cars or whatever the next thing that Uber will do, from that perspective. All right, I will get off my segmentation bandwagon. The other thing that I know we didn't touch in from the other program is I always try to get startups to understand their marketing funnel. And the marketing funnel is just what is going to be their marketing and sales process. What are the steps? If you go through the process of being in your customer's shoes, how do they see from the initial awareness that you're creating to you getting follow-on sales? What is that process? How are you going to get them aware? Is it, as we just learned, is it going to be digital ads? Is it going to be an event? Is it going to be a billboard? How are they able to actually buy your product? So what are the steps from awareness to customer satisfaction that you have, and then when you're a startup, you don't know. And so you have to kind of test some philosophies. Should I use Facebook ads, or should I use search engine optimization? Can I use a Facebook ad to drive people to an event where people will then go to my customer list, and then we can actually send them emails? Like, so there's a process that you have to build. That's called your marketing funnel. And it takes time, for startups, especially those in more complicated products. The more expensive your product is, if you're in the business world, this process becomes a long process, and there's multiple steps. So, we're trying to, especially for engineers and scientists, it's a difficult process to try to teach them, like there's a process to marketing. It isn't just you'll have a Facebook ad and revenue comes in, there's multiple steps, and kind of figuring out how to build this up is different, and how the funnel looks for a B2C customer versus a B2B is massively different. B2C use a lot more marketing, B2B is a lot more business development, and so the funnel looks very different. Just wanted to introduce it here. And then lastly, I'll talk about messaging. We're good on time. A lot of, again, especially engineers, scientists, they have a problem of messaging. They want to talk about what their product does instead of what their product is solving. It's the old, it's like when you buy a nail, you're not buying a nail to just as a nail. You're trying to connect two pieces to each other, two boards or something like that. Every product has a purpose. It's more than just the physical thing of what we call that product. Every product has an experience. Every product has a strength. There's problems you're solving with a product. And so when you're messaging, we're trying to tell people, don't message that you're this SaaS company and you're using AI and blah, 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 blah. Like, what are you trying to do? How are you trying to help your customer? What problems are you solving? What at a consumer level, what are you trying to make them experience? And you really have to, the other thing we're trying to say with messaging is you really have to experiment with different messaging. So you might do a 3-month marketing campaign when you're telling people that your product is more affordable, and that doesn't work. So maybe you have to talk more about quality. So it's really, it takes a while to get your messaging. And so, you have to experiment it with a while. And that's why some of the messages, like Nike and other have been around for decades, because once you get it, it's easier to work with. So with the messaging, I just wanted to play a video. I found this video because I taught a marketing class in Asia. And this is just to give some context to this video that I'm going to play. And I'm going to stop sharing and then resharing so I can add audio to it. This video is like a advertising award video. The important thing, this video was done for a life insurance company. And as you know, I mean, again, you can sell life insurance as what it is. When you die, your family members get, money. And that's the sort of function of life insurance. But obviously, for people to like put away money for a time when you pass away, where you wouldn't even see what happens to that money, like, how do you message that? And so this Thai life insurance company came up with this video. There's subtitles in it. That is, it's an award-winning video. So you kind of get to understand of how do you message something to help convince people to engage in your product. So tell me if you don't hear the actual video. Can you hear it?
เขาจะได้อะไรถ้าเขาทำแบบนี้ทุกวัน เขาจะไม่ได้อะไรเลย ไม่ได้รวยขึ้น ไม่ได้ออกทีวี ไม่มีใครรู้จัก ไม่ได้มีชื่อเสียงที่มากขึ้น เพราะสิ่งที่เขาได้คือได้แค่ความรู้สึกได้เห็นความสุขได้เข้าใจได้ความรักได้ในสิ่งที่เงินซื้อไม่ได้ได้โลกที่สวยงามกว่าเดิมในชีวิตคุณอะไรคือสิ่งที่คุณต้องการมากที่สุดไทยประกันชีวิตเชื่อในความดี
All right. Hopefully you saw that, but they never talked about life insurance, right? It was, you know, I mean, I don't know what you thought, Stacy, but the meetings were deeper.
That almost made me cry. I'm not gonna lie. I'm not gonna lie. Very, very emotional.
Well, that's the thing. You almost have to be because you have to think about what happens after you die and what that'll happen and can you give money now to help, and there's Thailand is a very Buddhist country and there was a religious part of that. And so it was you don't so the point is on the messaging, you don't just want to say, buy life insurance. Like, why are you going to buy life insurance? You're giving to society. This is almost a religious part of what you should be doing. You're giving to the next generation. Like, they call the video unsung hero. Like, you're a hero by buying life insurance. And so, it's to understand how to message is really, really complicated. And you have to think about what kind of things, your consumers really want to think about. That's all I had but I just wanted to, I found that video one time. I'm like, wow, that is messaging at its best.
That was pretty intense. Pretty intense. I have to pull myself together just to be able to close here. Yeah, those kind of things get me, especially the dog. I'm a dog lover. I don't know. So anyhow, as we wrap up this session, let me say I just saw something in the chat. John said, if only there were a center in the region that could help with that messaging. I think we just hit the nail on the head right there.
There you go.
Closing out this session, thanks to John, who, for any of you, again, if you need any more information about the center, please feel free to reach out to me. I'll make sure that we get the connections for you. But I think this session this evening, take what you heard, put it into action for your own businesses. Start thinking about how you can sharpen your story. You can come up with an amazing one like that. That's pretty incredible. Strengthen your visibility to your customers. Pursue some of these funding opportunities that align with your goals. These are the pieces that are going to help turn any great ideas or any great businesses and push that momentum for those businesses. So again, a sincere thanks to Dr. John Lombardi. Thanks to Mike and Emily and Ben with the MIA team, helping us to demystify some of those funding landscapes. Both of these, again, are incredible resources as you either continue or start to build your ventures. So Please look forward to some information in the following weeks. I would love to set up with John a tour if you cannot make the open house, but keep in mind that he is doing that open house on April 29th, 2 to 4:30. But moving on from here, you'll hear some information back. So thank you to everybody that was here this evening, and looking forward to seeing you at potentially another session or a tour or an open house. Or if you have any questions, please don't hesitate to reach out to myself. Luma is the other one in the center here. So you can reach out to either one of us. Let me see, I see some things popping in the chat. Okay, so thank you everybody and have a great evening. Think about that video too.
Thank you.
Thank you.
Thanks everyone.